Welcome to Jay's Watch List. This is a podcast series that I will be doing with companies which, in my view, are sufficiently attractive to keep an eye on them, with a view to possibly recommending them to the subscribers of Jay Taylor's Gold, Energy, and Tech Stocks. The company I want to focus on today is one that was a previous recommendation in my newsletter last year, namely Aurvista Gold Corp. It trades in Toronto under the symbol AVA, and you can buy it down here in the United States, as I have, under the symbol ARVSF. There's 69.7 million shares outstanding, trading at 6 cents Canadian, last in the United States at about 4.7 cents. It's got an incredibly minuscule market cap of just $3.25 million in U.S. money, and that's despite just a whisker under 3 million ounces of gold, most of which are right on surface. One of the reasons that I am turning very bullish on this company is the addition of Jean Lafleur. He is the president and CEO of the company, and I'm really happy to tell you that Jean is with me today now to discuss Aurvista. But just a little bit about Jean's background. He is a professional geologist with 30 years plus experience in various capacities within the mineral exploration industry, including company projects and property evaluations and audits, and he has been involved in project planning and execution, supervision and management, and resource estimation, so He's really has a very well-rounded background. He's been active in mineral exploration in Canada as well as internationally, places like Africa and Mexico and Ecuador, and again with a wide range of industry-leading companies, big-name companies, household names like Newmont, Falconbridge, and Placer Dome. From 1998 to 2003, Jean worked with McWaters Mining. It's a Quebec-based junior exploration mining company and was instrumental in the discovery of new ore reserves for that company's gold projects in Val-d'Or and Malartic mining camps, including the development of the bulk mining exploration program at the Canadian Malartic gold property, which eventually has become Osisko's multi-million-ounce gold deposit, is now a very large gold mine from which Agnico Eagle and Yamana Gold are together expected to produce upwards to 600,000 ounces of gold a year. So truly an amazing major deposit that Mr. Lafleur was involved in helping to outline. He sees geological similarities, though, between that Malartic property with all those ounces of gold with some of the property that Aurvista has, and again, Aurvista has, as I noted, just a whisker under 3 million ounces, so it's a good starting point. I sat down with Jean in Vancouver this past January, and I can tell you, when you sit down next to someone, you get a sense of their optimism, and Jean truly is very upbeat about the prospects for Aurvista's deposit. So welcome, Jean. It's really good to have you with me today.
Thanks, Jay. I appreciate being here with you.
Really good to talk to you. I remember the sort of optimism and the reasons for believing that the Douay Gold Project, which is the Aurvista Gold Project in Quebec, has the potential to grow into something considerably larger than the 3 million ounces. Not that that is anything to sneeze at, but your project, as I just mentioned, is the Douay Gold Project, the Aurvista Project, and it is located in Quebec. What can you tell our listeners? I suppose most of our listeners are very well aware that Quebec is one of the best jurisdictions to operate in. It's a very friendly province to operate mining companies. But what can you tell our listeners about operating in Quebec and perhaps a little bit about your property and why its geological prospects are so promising?
Well, it goes back quite some time. When I was with Placer in Quebec 25 years ago, this property, the Douay property, was identified back then as one that could hold potential for multi-million ounces. And we tried to acquire it at the time. It was owned by VR Inc. They're quite reluctant to give it up for good reasons. But over time, they've worked on it. There were some other parties working on it too, and they basically derived a number of high-grade gold zones, right? And the biggest one was the Douay West, which had close to 100,000 ounces, and they focused on that. But you always, in our back of our mind, we always saw that there was significant potential along a 5-kilometer strike length. And at the time when I was working with Placer, we were looking at these mega deposits since they were much cheaper to operate, much cheaper in terms of of milling. Obviously, they're cash intensive at the beginning in terms of capital, but it was sort of the trend that was coming in back in the early 90s. And this property has its advantages. There's no town or cities nearby. It's basically located along the major highway between Val-d'Or and Matagami, Quebec. It's in the Abitibi Belt, as they call it in Quebec. The belt itself is renowned for its gold potential, its gold mines, whether it was the Timmins Camp, the Kirkland Lake Camp back in the early 20th century. The belt itself has produced close to 200 million ounces historically, and we find the current deposits, the current slew of high-grade, low-grade deposits, whether it's the Canadian Malartic mine that's owned by Yamana Agnico Eagle, the Detour Gold deposit and mine, I would say. They're in commercial production right now. These are 10 to 15 million ounce deposit, and so there is opportunity for even the high-grade ones, and one that has been talked about right now is the Intergra story out of Val-d'Or, where they have over 1 million ounces in higher-grade material. So they're very good. It's a very good greenstone belt. The rocks host quite a bit of gold, and the Douay property itself has not changed in terms of its potential. Aurvista got involved in 2010-11. It was the first project that it had acquired 100% of, and we kept Vior, the vendor company, as a major shareholder of Aurvista. They have approximately 30% of our share base, so a bit more than 20 million shares, and they're quite present on our board. They have 2 board members. I interact with them all the time, so they're very good. They're very proactive in terms of assessing the deposit, assessing the potential, and assessing our strategy going forward. So, look, Jay, it's a great property. It's one that I finally get to work on after all these years of having it in the back of my mind. And 3 million ounces is a start. We do have an 8-kilometer trend that's been explored at, say, 200-meter spacings at the best. The high-grade zones, there's 6 of them that have been explored in the past. They've been more explored in detail over a couple of 100 meters each, and they roughly contain 150,000 ounces total in higher-grade ore, or not ore, but mineralization. So our strategy in the longer term, when I'm talking the next 3 to 5 years, is basically to look at 3 opportunities. One is the high-grade potential, the Douay West Zone, which right now by itself, it contains about 150,000 ounces of gold mineralization. The grades are probably in the order of 4 to 8 grams in general. So it's something that we have to look at. We did a PEA which showed that it was positive, that the PEA usually gives you an idea of where you should go, how you should approach it to improve the grades, how you should improve, say, the mine plan to go towards pre-feasibility, feasibility. And we're quite confident now that we can move forward, even as the gold price comes down, that we can improve the economics of this and look for maybe a 5-year reserve base and a 5-year resource base to go ahead and go into the feasibility at some point within the next year. So it's a very active project. We're doing pre-feasibility type work with the engineering of the overburden, the engineering of the rock itself. We're looking at stope designs for the underground, and it's a project that already has a head frame. Unfortunately, no shaft for now, but the head frame was a previous vendor of the property. But we could use the head frame as an ultimate shaft or raise for the underground project. So there's big advantage to this. And like I said, we're close to the highway. We have road access. We have power access. We have a camp on site. It's about 65 kilometers from Matagami, so a good mining camp. And we're about 150 kilometers from Val-d'Or by road, which is the gold mining camp close by. Detour is located about 150 kilometers to northwest, and the Canadian Malartic deposit is 150 kilometers to the southwest, whereas Val-d'Or is more to the southeast. So we're in a great camp, great situation, lots of history. Municipalities in the region are very proactive in helping us out. We have a First Nations agreement, an MOU, as they say, memorandum of understanding, which will permit us to go ahead and likely develop the project with their help. I've met them first time last week, and we had a great meeting. They're very involved in trying to educate their young. They want a lot of involvement in projects. So I think it's a very positive area to be in right now, worldwide. Unfortunately, the gold market is, it's not there, but to me, it's a question of getting ready for when the market turns around, and that's exactly what we're doing. Right?
Absolutely, no question. And I have the sense that we're near a turnaround, but we'll have to wait and see for that. But let me ask if you could you talk a little bit about the PEA, and that's one question. Could you talk about the results of the PEA on that Douay West, and also perhaps a little bit address the concern about capital, because getting into production these days, especially with a minuscule market cap like Aurvista has now, would be something that some investors would obviously be concerned about.
Exactly, you're right. So the PEA was done on a small production plan. So we did. Previously, there had been PEAs done by Cambior and Horizon on the Douay West, but they strictly looked at the underground potential. We decided with the recent drilling to look at the near-surface crown pillar as a possibility of reaching through a very small open pit, and that's what we focused on. So an open pit starter open pit with about 40 to 50,000 ounces available, and then the remaining 100,000 ounces going underground from the bottom of the pit. So that was the PEA plan. And it was, like I said, it was positive. The break even was just under $1,100 gold, which you might say, you're very close to that right now with the bottoming out the gold price. But basically, we used extremely conservative capital numbers, operating numbers for the pit and the underground that we could always improve on. And don't forget, the PEA has plus or minus 40 to 50% grown into it. So the idea is to get a PEA that's at least break even, and we're better than that. We're about $100 over that. And from there, as you move on, you improve the economics by doing more drilling, get more reserves, more resources, and then move into the feasibility stage where you can get your cost down to a 10 to 15% margin of error. And that's basically our strategy. Now, we've done a lot of the work. We spent roughly $1 million outlining the engineering work. We have, or will have, at the end of the quarter, March 31st, we'll have about 500,000 left. And so what we've done now is that we could do nothing for the next 6 to 8, 9 months, and basically pay our overhead of about $30,000 a month or even less. But I'm a little more proactive. Like you said, maybe we're getting close to a turnaround in the market. So I'm looking to do a small financing, $500,000, $1 million at the most. Even though our price is very low, I don't want to dilute the company more than I have to. So if I can do 500,000 at a better price than what we have now, I think it'd be useful, so we can advance some of the drilling around Douay West, and to also look at our generative side, because we have right now on the property, we have 20-kilometer strike length of what we call the Casabardi Fault, which is equivalent to the Porcupine Dester or the Large Lake Cadillac Fault, right, which hosts all these other big deposits. So to me, that trend is significant, and very cheaply, by using manpower and small surveys in the field, we could get a pretty good idea of that potential. Is there other gold mineralization along that fault, or maybe even some base metal mineralization? So we're looking at that. We're examining the old core. We're going through the old geophysical surveys. We're looking at sampling in the field. So all these studies in together are very cheap, and it's well worthwhile to get some more targets for later on. And we can't forget the super pit potential, albeit it's a very expensive proposal. I don't want to start looking at that at this point, but I have it in my back pocket. It's a bit like an ace that you have in your back pocket. Yeah. But that big potential has about 3 million ounces right now in inferred resource. So it's a compliant NI 42-101 resource. So it's there, and it's there for the future. I mean, if we get a better gold price at some time, and our stock price reflects that, then maybe, yes, we could do financing to advance that. But at the same time, let's do it by stages, get success, and then move on to the next stage, and do it in tranches of $500,000 to $1 million. I think it's perfect for this project.
Well, I think it's wise to go about it that way, but I can tell you that, and my listeners, when you talk about a super pit, I remember one of my biggest success stories in my newsletter over the years was it was Plangio owned it. It was the Detour gold deposit, the Detour, what is now Detour Gold, but it was the Detour, I think they called it the Detour Lake project back then. But I remember when Plangio picked it up, they had just about 1 million ounces, and now how many ounces are there now? It's a huge deposit.
That's right. I mean, they're looking at 15 million ounces, which shows that there's still a lot of potential in the Abitibi of Quebec and Ontario. And I think for the companies that have access to capital, access to, exploration development cash, there are good opportunities out there. And Douay, I hate to say it, but it's kind of one of the last ones, right? It has that 3 million ounces. It has upside potential, and having worked in the Abitibi for almost 40 years now, I could tell you with confidence that these deposits are all very similar, right? So they have a similar type of gold, disseminated gold. They have sulfides with them. The rocks are identical, the alteration. So for a geologist working in mineral exploration, this is like working in Nirvana here, so it's great.
Yeah, and you've had lots of experience there, which, quite frankly, is one of the reasons that I find this story has a lot of appeal to me. Now, just a couple of questions, Jean, if I might. One was when you mentioned a $1,100 cost. Was that an all-in cost or a cash cost?
That was an all-in cost.
Okay, all right. Thank you. I just want to make sure that was the case, because your cash cost might have been, what, $800 or so?
That's right. And don't forget, I mean, with the devaluation of the Canadian dollar, a lot of our costs are all in Canadian dollars. So it gives us a gold price in the order of $1,500, right, depending on the daily price. But it's strictly, it's a big advantage.
Well, yeah, I'll put that in perspective, because you're talking about $1,100 in Canadian money, I suspect, and $1,500 on the top line now.
Exactly. So.
All right. The other thing I wanted to ask you, I think I've seen somewhere that with respect to some early production from Douay West, you may be able to take advantage of some toll milling opportunities, and that in that way not have to spend a lot of money on building your own mill.
That's right. If Douay West goes ahead, it's a smaller operation, so you might say, okay, we don't need all that capital to put up a mill on site for tailings facility. It's always a permitting issue, no matter where you are. But right now, we're looking more as a quarry operation where we could use toll mills. There's a mill about 50 kilometers south of us, the Sleeping Giant operation, which unfortunately the vendor of that one is having financial problems. But the mill is operational. It's fully permitted. It has tailings facilities. And if that one's not available, there's always milling towards Val-d'Or, even though further away, 150 kilometers away. But there's a lot of opportunities there. And there might be ways to pre-concentrate some of the material and send concentrate down to these other operations, which are always looking for higher grade material. Right. So I think there's good opportunity in the Abitibi right now to look at toll milling, and it would definitely help us in terms of keeping the capital down and helping us in the permitting of the operation. Right?
Yeah, absolutely. Well, Jean, one of the things also that I find appealing is, first of all, you don't have that many shares outstanding compared to a lot of competitors out there these days. But secondly, I think something like 62% of the shares that are outstanding are held by institutions and people that are close to the company. Could you tell our listeners a little bit about who some of the main shareholders of Aurvista are?
That's right. I mean, I am a shareholder of Aurvista, and I've been buying shares. But the biggest shareholder is Vior, the original vendor. They own 30%.
Yes.
Yes. And the other big holder is Aurvista, which is the mother company for Aurvista, and Aurvista Resources. They have about 12% of the stock. And when you look at The board of directors, Jerome McCarville, Ed King, Brian Keeler, CFO, who is a board member. Ed King's our chairman. You look at the whole group, including myself, we own, including Aurvista, about 18% of the stock.
That's good.
So and we're still buying it, and I think that's very positive. People believe in our project. I believe in it. And we also have the Quebec funds, so the Caisse de Dépôt and some of the other funds around the Caisse, so the Mexidex, they own about 6-7% of the stock. And we have investors from the Montreal area in Quebec, which have been faithful to the company. They own about another 6% of the stock. So when you add everybody together, right now it's about 64%. We've added a couple of percent in the last few months. So it only gives a free float of 20, 25 million shares total, which is great in a way. But at the same time, it'd be nice to have a bit more float in the sense that, more trading, more shares coming out. Mm-hmm. But right now, any kind of share movement, you could do it on minimum shares traded. So, we're always looking to get some new shareholders, more retail buying. I think it's a great opportunity right now.
Well, I couldn't agree with you more. I mean, I think it's times like these that the really savvy investors have stepped forward and buy. It's not what you feel in your gut necessarily, but history shows that the really successful investors, I think Rick Rule and some of the people that I've learned to know over the years, are the kind of guys that are going in and buying stock at these levels. Now, aside from yourself, just another question or two yet for you, Jean, if you don't mind. What about, besides yourself and the management team, can you tell our listeners a little bit about some of your other people? Because I know you have a good team.
Yes, we do. And I think the first individual that I have to really talk about is Jerry McCarville, the principal in the company through Aurvista. Jerry has had tremendous success in the past with Desert Sun Mining in Brazil. Mm-hmm. Company was sold. Also Consolidated Thompson in the iron business, which was a great winner. He was also in Repadre Capital early on, the company that was sold. So he's had success, and success breeds more success. So mm-hmm. I think with Jerry, we have a very strong shareholder base, very committed people. Ed King, former president, now retired of CIBC World Market. So a very savvy individual, and I stick very close to him for his, as he consults, he gives me a lot of great advice. So, it's great. And myself on the board, Brian Keeler, CFO, has been around for 30 plus years. And the two gentlemen from the VR, the company, Claude mm-hmm. Saint-Jacques and Lafleur, has given us great support. And, we have a very strong board. And we're looking forward to a great future with the company.
Mm-hmm. All right, so just another question that comes to mind always, and one of the questions I like to ask CEOs of companies before I recommend them. Besides the gold price, and you mentioned, you have a nice margin already if you look at Canadian dollars, but aside from the gold price, what is your biggest concern? What fatal flaw, if any, do you see that could deter success of the Douay project?
Well, the only thing I can think of right now is social, responsibility, right? Mm-hmm. There's a move in Canada that's sort of a negative for mining, but a lot of this comes from areas that had mining back in the 19th century. People are not too conducive to have operations in their backyards, but what really saves us in Aurvista and a lot of the companies that we're in the Abitibi, so traditionally, very strong pro-mining
right.
area.
Exactly.
So I think Cisco showed the way. They did a lot of sustainable development in the community of Malartic. They basically rebuilt half the town at a tremendous cost, but it showed their commitment to the local people, and they mm-hmm. had great support. So I think you have to focus on that there will be sustainable development. But right now, the only technical issue is probably the overburden itself. We have thicker portions of overburden, which we have to deal with. But at this time, I'm not looking at that as a big problem because it's an engineering feat. But we're looking at 15 to 20 meters of overburden around Douay West, which, again, it's all about economics. If you're going to spend a lot of money to move a part of a town, it's probably equivalent to moving overburden in a way.
Oh, right.
So
right.
for us, right now is to look at the economics of a small pit, get to know the overburden, how it will react as we mine through it, and then scale it. It's just a question of scale. If we do a bigger pit, then you just scale it up a bit more. So you get to learn. It's a learning experience, but at the same time, I think it's not a fatal flaw. It's probably just a yellow flag that you look when you're doing feasibility type work. But apart from that, there's very little, Jay, in terms of negative for the project. Like I said, we have a great relationship with the First Nations community, which I want to expand. You know, we will be hiring people to help us in the exploration part. So it's all about relationships. It's all about sustainable development, and you know, it's all about you know, helping the province, helping the communities around you. And when they support you, everything works.
Well, it can be a win-win for everybody, no doubt about it. Just to ask you to speculate a little bit, you got this massive land position. You mentioned something like 20 kilometers of favorable strike length and very, very underexplored prospect. But what longer-term blue sky, what do you think is possible for the Douay project? I mean, can you double those resources from 3 to 6 or something more than that, or what do you think?
Well, personally, I think yes, we can. I mean, and we can more than double. Like I said before, all these deposits, whether it's the Dome Mine in Timmins when they did the super pit, when they looked at the Doyon pit back in the early 80s, very similar. Then Canadian Malartic came along and Detour. These are deposits. They're in the 15 million ounce range, which average around 10 million ounces. So, you know, being a geologist, I'm very positive.
Yeah.
And right now, my target is I want to get this up to 10 million ounces. And I do have the strike length. I do have the targets to do that. Now, whether it offers that once I do the work, it's another story, but that's the way I'm going to explore it. Looking for high-grade zones, which have never been mined on this property, where all these other historic mines, they don't have any high grade left. It's just a low grade.
Yeah.
And I also have a low grade halo around my high grade. So right there and then is great to have this match. But I still have, I could just go for the high grade if I want because of the economics, or if the price of gold comes back up to 2,000, well then I have the low grade potential, and I still have the strike length to find other deposits which may offer the same potential or something totally different. So that's the strategic advantage of having a strike length like we have.
No question, high grade as well as lower grades. And of course, when you talk about $2,000, you're talking in Canadian dollars, which isn't so far-fetched. And I think not even in U.S. dollars ultimately, but in any event, $2,000 Canadian, which is very, very possible. But again, you said you're getting something like what, 1,500 Canadian now?
Yeah, exactly.
Yeah, so it's all the difference in the world. And while you know, in U.S. The gold price looks low, gold has been very strong in most other currencies as the U.S. dollar has gotten stronger. Well, one final question, maybe in some sort of summarizing here, Jean, if I could. You know, there are people like me that go out and we're in this sector. We look at mining companies. We go to investment shows and there's 300, 400, 500 booths, and that's only 20% of the total or so. What would you tell our listeners? Why should they pay special attention to Aurvista as opposed to most of the others out there?
I think it's the ounces of gold that we have in mineral resources. The 3 million ounce is something one has to consider. If you go look around, there are very few companies, small cap companies, that have 3 million ounces.
Sure.
There are very few companies that could show the upside to double or triple that. And the fact that, we do have access to cash through the experience, the knowledge of the people that we have on our board, plus current shareholders. So just with that, I think that sets us apart from a lot of companies. And we're always looking to improve, say, our cash position. And like I said, I don't need that much cash to advance the property, and we're saving on cash. And if we do a $500,000 financing, I think it's sufficient to move us to the next stage in the generative process to advance towards the pre-feasibility. So we're looking for better times, but at the same time, I'm trying to be aggressive and, try to put out news on a monthly basis. And look, I think there's a strategic advantage to seeing Aurvista in your portfolio. I'm doing it. Like I say, I'm actively buying shares, and so I think it's a message. It's a good message to put out to investors.
Oh, I think you're absolutely right. In addition to the things you named, of course, being in a politically safe jurisdiction, one that's pro-mining, there's not many places more favorable than Quebec. That's for sure. Well, I really want to thank you for spending so much time with us today to explain your project. I think it is an exciting project. I'm expecting to add it into my newsletter sometime in the near future, probably as early as this weekend. So those of you listening to this story might want to think about subscribing to my letter, or I guess people can go to Aurvista as well, and I think the report that I'm going to be writing up might very well be posted at Aurvista as well. So in any event, the website I guess people can go to is aurvista.com probably?
Yeah, aurvistagold.com.
Okay.
And yeah, that'd be great, Jay, so I appreciate it. Thank you.